Just takes a minute to get going, folks. All right, here we go. Just redo this here. Copy, point this here, point that there, point that here, point that there, and we should be getting going here. There we go. Omar, good morning. Let me just go ahead and share my screen here. And we should be going. Good morning. Good morning. Good morning. And good morning. Hopefully everybody's doing well. Look at that. We got a big crowd here. Omar, Cam, Flying Ronan, Jill, War Dog, Timothy, Rich, JB, Kenny, Wayne, Sergey, Robert. We got a lot of Roberts here. Dave. Whoa, look at this. A lot of people are here. Love it. 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 Hope everybody had a good day yesterday. And hopefully I helped you stay out of trouble. And hopefully, hey, Zoe, how are you? Or Karen, how are you? Hopefully, you guys made some money on CrowdStrike yesterday, right? If you guys made money on CrowdStrike in the pit, let me know. All right. Good morning, everyone. We definitely, wow, we have 138 people here. We're packing this thing pretty good. Let's get into everything. I'm sharing my screen. Let's talk about everything today. Today's going to be a very interesting day. Steve, Rochelle, good morning. Heather, let me just put good morning here for everybody. Good morning, everyone. There we go. Perfect. Jacques, good morning from I think you're from Uruguay, right? Anyway, lots to talk about today. As usual, I usually start when we have 100 people in. We already have 159. I didn't even have a chance to post links. Boy, you guys got here fast. What I wanted to tell you was that Cam White has a class at 10 a.m. from 10 a.m. to 1 p.m. I thought it was 2 p.m. to 1 p.m. called Customer Service Live. Click the link in your channel and you'll get on. Lastly, before I begin, I have another class today right after my VIP room. My VIP room is at 11 a.m. today. Remember, it's Thursday. Thursday and Friday, my VIP room is on a little bit. Oh, so sorry to hear that, Eagle Beagle. D-Day, yeah. Sorry about that. Moondog is in the house. All right, so that's that. And then here is the link to my class that's happening right after the VIP room today at noon, and we're going to be starting right now. All right, that's the seasonality class in case you guys missed it yesterday. All right, let's talk a little bit about Art. Good morning. Let's talk about market action. The NASDAQ is up 22 points. We're seeing a little bit of follow through. We're not really seeing any follow through from the Dow. And to be honest with you, I wasn't really impressed. I wasn't really impressed by the performance of the Dow yesterday in comparison to the NASDAQ. The NASDAQ was up about, 300 something points, and the Dow was up like 90 points or 100 points. That's complete pitiful. I mean, let's just put it this way. If the NASDAQ was flat yesterday, the Dow would be down 100 points. So basically, the NASDAQ was just so darn strong that it pushed market cap completely up. So something we need to be very, very mindful of right now. The Dow is not our friend. Blue chips are still not our friends. As a matter of fact, and I usually go this, I want to jump around a little bit because it actually makes sense right now to do so. If you look at the sectors, take a look at this real carefully, just very, very carefully. Look at QQQ, right? Look at S&P 500, okay? Now look at financials. They're inside of a range. Inside of a range means non-fast moving. There's no directional bias. Yeah, sorry about your loss, Eagle Beagle. I call Adam Eagle Beagle. Brian, good morning. Good morning. Good morning. Good morning. And thank you for doing Brian and Matt right now. Brian has been revising that code that I want to put into the members area of the full-time trader class. And he's trying to make it so the VWAP appears automatically. And he's testing it with Matt right now. They've been going back and forth. Matt wants to make sure it's kosher, this, that, before putting it in the members area. But it's looking really, really good. I wasn't even planning on giving you anything like that. But you guys should really thank Brian. This guy is... he's a programmer. What else can I say? And thank you, Brian. I really appreciate everything you do. I really do, and I hope I could make it up to you one day. Russell 2000. Look at that inside. No soup, right? Look at that. Yeah. Very, very, very much so. Consumer staples, kind of inside. Energy inside. But look at semiconductors doing the same thing that the S&P is doing, which is doing that because of tech. So you've got these, right? You've got three. But look at this. None of them are looking great. Utilities, inside day. I mean, real estate, inside. Looks like it could be going somewhere, but nothing great. Bitcoin looks like it's getting a little bit of a groove on. Let's first finish the think or swim one. All right. Let's not be so ambitious. Industrial stocks had a big day yesterday, but look at where they're at. They look like the Dow. It doesn't look like there's much going on here. Healthcare looks like it's moving. Communication. Remember what I told you about communication? That was my big sector. Tech, communication, which is tech. Communication is tech. But look at retail, inside day. Look at basic material, inside day. Look at mid caps, inside day. Look at home builders, inside. Dow, again, because of what happened yesterday, consumer discretionary, which Apple, Amazon, so this has a little bit of tech exposure. But overall, I'm telling you right now, if the tech was to cool off today and there's no major catalyst for blue chips, there's nothing in the blue chip market to make it go up right now. And also, I want you guys to remember something else. I want you guys to remember something very, very important. And this is something you guys should pay very close. I was thinking about this last night while I was with my wife. We were sitting and we were talking, and I was thinking about this during dinner of all times. Here's what you need to understand, and this is something that should concern you. And let me go back here. When you see the QQQ go up like that, when you see semiconductors going up like that, what causes technology? And folks, you're not going to get this from Kramer. This is one of those deep thoughts that I'm having, okay? So listen and listen good. When you have tech blowing up and you have the rest of the market blowing up, you could be assured that the upside you're seeing is based on actual economic data and fundamental data, okay? Because blue chips are not speculative in nature. Like financials, consumer staples. This is not, you're not going to see Amazons in here, right? You're going to see performance based on what happened. You're not seeing brand new companies coming out with brand new products, especially like for consumer staples, energy, excuse me, healthcare. Well, maybe healthcare, industrial, right? Real estate. There's no new inventions, right? Okay. So where am I going with this? Well, think about this for a second. And this is not going to make you happy, but think about this for a second. If you're seeing speculative activity in tech stocks at the expense of blue chip stocks, that means value is not driving the market. That means speculation is driving the market. Well, what do I mean by that? Let me give you a good example. If you have a good tech company like NVIDIA, for example, I'm throwing it out there. It doesn't have to be NVIDIA, but NVIDIA is a perfect example of what I'm talking about. NVIDIA can tell its investors for the next 10 years that it's not making net income, hypothetically, and it could still make higher highs every single year and every single month. Why? I'll tell you why. Because it's a speculative stock. It's going up based on what will happen in the future potentially. It's that big carrot, right? Blue chip stocks don't go up based on what will happen in 5 years. You can't tell, McDonald's can't tell its investors. McDonald's cannot tell its investors that, hey, we're working on this hot hamburger, and in 2 years, when it comes out, it's going to revolutionize the hamburger world. That sounds silly, right? No one's going to buy that. People are going to be like, ha, 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 ha. But Tesla can say that and get away with it, right? Apple can. Let me let my cat in. Hold on one second. He's making a lot of noise. Hold on. Come on, troublemaker. Here, you're going to have to show yourself off today. Here, I insist if he comes in, he's going to have to show his face to everybody today. Look at that. Guilty. Bonnie, you're guilty. All right. So my point is, hey, Dave, how are you? Good to see you here. And it was great chatting with you yesterday. Thanks for that email. You made my morning. So my point is very, very simple. My point is, if you see tech stocks getting away from financials and blue chip stocks, what it means is that it means that we're seeing too much speculation in the market. Too much speculation in the market. All right. Here, so you can see Bonnie. See what he's doing. There he is. He's just sitting there with me, hanging out while we're doing the report. There he is. Now, these are my gym shorts. Today's gym day. Tuesday and Thursday are gym days. All right, Bonnie. So my point is, I'm very nervous. I'm really nervous. Really nervous about the rest of the market because I don't like to see tech overcompensate everything. I don't like to see that. I don't like to see that at all, actually. So I'm getting a little bit nervous of the market right now. All right. So just FYI, because I'd like to see. I'm not seeing that heightened activity in the market. Look, even yesterday when tech went crazy, we consumer staples could barely get it up, and I like to see clearance, and I'm not seeing it, and it's making me more nervous about the overall market. Hey, Bonnie, want to say hello to everybody? There you are. All right. So again, warning signs. Licking crash. No crash, guys. No crash. None of that stuff. I'm just not liking what I'm seeing in the overall market. I don't like to see one sector or predominant sector over all others. You're not seeing a broad market gains, and if you're not seeing broad market gains, that's a fragmented market. And right now, look at this. Look at industrial stocks. They're down here. Look at real estate. I want to see a market where 70% of the index of the sectors are doing the same thing. I want to see consumer discretionary and tech doing the same thing. If not, then it's a lot more chip centric. And if you look at consumer discretionary, look at this. Look at this chart. It's looking okay in the last few days, but it's got to overcome all of this. It's got to overcome all of it's got to overcome all of this. It's got to overcome all of that. That's a big, big burden. That's a big, big burden for that stock, in my opinion. Big, big burden. All right. So basically what I'm saying is we got to be extra cautious and don't expect NVIDIA to cause the market to go up at the expense of everything else. It's not realistic. It's what happened with the internet stocks in the 90s, and it didn't end very well. So either tech is going to come back where the Dow is, or we're going to see a broad market rally, and I'm not really seeing that heading into the summer. Okay. Fed data. Usually Fed data is not as important as it is. Today's jobless claims is really important because jobs are in focus right now. Ever since the JOLTS report on Tuesday, jobs have been in focus. So today's report is going to be more important than ever. Do I think it's going to be a big report, or do I think anything major is going to happen? No, I think it's going to be exactly the same, but it is in focus, and it's gone up 5,000 in the last year. Ooh. So no, I don't think so. Zoe thinks NVIDIA driving tech. Let's just go get through Friday. Fridays are usually pretty good days actually for the market. Thursdays and Fridays. It's Mondays we got to worry about. Monday is the Bonnie, you really like being here, don't you? All right, here. People really want to see you today. So here, there you go. There you go, Bonnie. All right. So crude oil. Crude oil is starting to come back up. As I mentioned before, we broke a huge value area right here on crude oil. We're coming back up here. I think this is going to be a resistance. I think this is going to be a resistance zone. I don't think we're going to see as much upside. I would be worried about going long energies on this run up. I would be more comfortable probably right now writing spreads on the energy market. Maybe a iron condor, or maybe selling something out here and selling something out here. But I'd like to see clearance. And right now we're not seeing any clearance. In order for me to see clearance, we need to break this level here, which is the $70 a barrel level, or we need to go above the 50-day moving average. If we can get above the 50-day moving average, and for us to get above the moving average, we would have to get above the quarterly and the annual VWAP, the 100-day line, the 200-day line. I mean, there is a hell of a lot of resistance here. When I say there's a hell of a lot of resistance here, 200, 100, year to date, quarter to date, 50-day moving average. You have a lot. Good morning, Terrence from Tucson. So I would say energies right now are a non-discussion, okay? A non-discussion. Now, with that said, here's the exception to the rule. If you see, for example, most energy stocks are going to be just doing nothing right now. If you see one energy stock that's just going crazy, that's the one you want to buy. So one of the cool things about when a sector is not doing anything, it's much easier to find that one hidden needle in the haystack. Whereas if you might or may not have remembered yesterday, I send you guys a little note right here. Here, let me show you what I'm talking about. Here, look at the note I sent everybody in my trading pit yesterday at 3:16. Hard to pick relatively strong stocks while the S&P is at a new high. Relatively, in capital letters, I put it there. Okay, now. So what does that mean exactly? What do you mean, Roger? Every tech stock was making an all-time high or a swing high. How could you have a hard time picking bullish stocks yesterday? That makes no sense. Well, how do you pick a strong stock in a strong sector where every stock is going crazy? How do you figure out what real strength is? It's hard. Now, if you told me yesterday, hey, Roger, there's a chip stock that's making a new 52-week low, I would have jumped on that stock faster than you can say, who's your daddy? Okay? No joke. No joke. Seriously. Because I want to see something going different. But when the NASDAQ is up 300 points, how do I find a strong stock in the NASDAQ? Right? So so NASDAQ was doing this. So every stock was doing this. But when you have a sector that's not doing anything, are you guys picking up on this? These are very important principles of relative strength. If you're picking up on this, let me know. We'll go through that in a minute, Sandeep. We haven't got to global economy yet. So if you see a sector like that, it typically means that it's very easy. It's very easy to see if something is moving. All you have to do right now with energy is find not a utility stock, find an energy stock that's breaking out or breaking down, because energy is not doing anything. So again, it's a nothing burger right now. Gold market. Gold, believe it or not, gold is holding on better than energy. And gold is now above the 8-day EMA, and gold is now above the quarter-to-date EMA. Actually, excuse me, this is not this line is not the this is not the 8-day EMA. This is the year-to-date EMA, and this is the quarter-to-date EMA, and it's above both of them. So we could see a little bit of upside, especially if the market starts taking a dump today. Do I think tech will take a dump? No, but blue chips, I'm not loving what I'm seeing. And yesterday they were forced higher. Yes, they were forced higher. Okay, so just so you understand, I'd love to see what the blue chips would have done yesterday if the NASDAQ was up 35 points instead of 350 points. Okay, yeah, very hard. It's very hard for me to pick stocks that are strong when everything is strong. Because how do I know if it's out? How do you find the stock outperforming the S&P and NASDAQ yesterday when the S&P and NASDAQ are making swing highs? It's impossible. It's impossible. Okay. So again, just FYI. So gold is turning up. I like this. I like what I'm seeing. I'd love to see it go above the $2,400 an ounce level. That would be fantastic. Bond market. Oh boy. All right. Now here's the thing. Bonnie, don't cause trouble there. I'm going to kick you out. All right. I talked about this yesterday. I'm going to use the TLT. We are at a critical junction. We are at a critical junction right now. That's right, Rich. And that's right, Eagle Beagle. That's right. So you see where we're at? Let me just go a little closer. We are literally at we are literally at the year-to-date VWAP right here. All right. Literally at the year-to-date VWAP here. And this is the 8-day MA. You could see it right here. And this is the quarterly. I'm not seeing a lot of upside here for the bond market. Yes, the bond market's coming down this morning, and you need to watch the bond market over the next few days. If the bond market starts breaking down the 100-day line, and this is the TLT, it's reflective of the bond market, and the 200-day line, and start coming back in here, you can forget about this rally in the market. The reason we've seen a rally in tech is because of this. Look, this. Now, Zoe, I keep calling you Zoe, Karen. So just a little tip for you. If you see the bond market coming off even more aggressively than this, it's going to clip the wings from the NVIDIA rally. Now, it may not cause NVIDIA to go down specifically, but it will clip the wings off of that NASDAQ rally that you are seeing right now. Because bonds going lower, TLT going lower means yield going higher. And yes, it is down this morning, and we're at the year-to-date VWAP right now. We're at a very, very important level right now. If we start blowing up here, then that kid is going to get a lot of hope that he's going to get that bike in July or September once again. And I don't think that's going to happen. I personally think this is a pivot right here. A pivot is an area where you would put a risk stop. So I think the bond market is going to slowly start gravitating lower. I want to be wrong, okay? I don't want to be right. I want to be wrong, because if I'm wrong, we're going to get more upside from this rally. But if I'm right, the rally is going to get its wings clipped. Possibly, Karen, possibly. Or maybe sell some out-of-the-money credit spreads right here, which is also not a bad idea. Remember, bonds have $1 spreads between the strike prices, so you can do a pretty low-risk spread here, which I may do. My problem with that, Karen, is we have the CPI and the PPI next week, and that's very unforeseeable. And that's going to add some reality. And I'm going to tell you, the Fed is looking at that like there's no tomorrow. So crude oil, choppy. Gold, choppy to potentially upside. We're going to watch it carefully today. Bond market, I'm very nervous about the bond market. And yes, it's giving directional bias, but this is because of the jolts and weak manufacturing that's saying, hey, we got to raise rates earlier. We got to raise rates earlier. If today's data, if tomorrow's data, and if next week's data doesn't confirm that, you can expect downside. And I'm going to tell you, you have to have some really good data to drive this higher. I mean, you have to have some really good data, because the parents have to completely do a 180 now. The Fed would have to do a 180 and say, wait, last 2 weeks ago, we said that we're not going to lower rates. But you know what? In the last 3 days, we've changed our mind. They're not going to do that. They're not going to do that. It's too soon for them to do that. They just don't work that way. Okay. They don't work that way. All right. So potential choppiness with beginning signs of weakness. But I'm going to tell you, the blood will be in the water if this starts going to the 200 and right here. I'm telling you, as I sit here right now, there will be blood in the water. And by the way, for the record, 1, 2, 3, 4, 5. This is the 6th time it tried to rally. Let me let the cat out, please. 1 second. Sorry about that. He had his entertainment for the day. So I would be very cautious about this rally. I would be very, very cautious about this rally. Okay. I'm not trying to pick a market top, but I'm explaining to you based on everything I'm seeing fundamentally and technically. I just don't see the firepower for the bond market to go up unless the data is going to get today's data, the employment data, tomorrow's employment report, the CPI and the PPI. They're just awful, 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 awful. Oh, I mean, god awful, god awful. And that would cause the market to actually rally and this to go higher, but I'm not seeing it. I'm not seeing it. All right, volatility. Well, volatility obviously is on its way down because the stock market is making, yeah, right, Tim. Nope, no pun intended. Oh God. Um, so I think volatility will stay a little bit down, maybe try to go down to this level, but I think it's mean reverting. And I'll be quite honest with you guys. I would right now, we're going to talk about that in a minute, Cam, in a minute when we talk about global economy. Just give me a minute. Yeah, let the cat out of the bag, right? So I think volatility is actually bottoming out here, and I think over the next two to 3 weeks, we're going to see some upside. I don't know if I'd be buying calls yet, but maybe over the next few days, I would consider buying some calls because I think we're going to be going up to the 16 level a lot sooner than later. Remember something, volatility is mean reverting. So every time you see this, you see volatility is not like a stock. It doesn't have follow through. It doesn't have a catalyst. It's yeah, right. So be careful here, but I don't think we're going to go down this low again. I think we're going to bottom out right around here, right around this level where we're close to right now, and then start coming back up. So shorting bonds and going long volatility over the next few days may not be the worst idea in the world. Okay. We had Lulu. The number was very good. We had Dollar Tree. The number was very bad, followed by more negative news about Dollar Tree. So these kind of offset each other. Lulu did better than expected. Today we have DocuSign, and that's it for earnings, guys. Earnings season's over. I may do a earnings scorecard today in the VIP room if I have time. Those are really good because we could see what was expected versus what's there, and we can kind of put an end to the earnings season. I try to be thorough. You can't miss anything around here. Okay, now let's talk about global economy. So yesterday, Canada lowered their rates, right? So the kid in Canada is getting his bike. What about the kid in the US? And what about Europe? So let's talk a little bit about that. And I'm going to talk about Europe in here as well. So market participants are gearing up for a new round of US economic data. That's coming out in 1 minute. That's going to be this report right here. And if this report is 216, 215, that's going to take an edge off of the bond market because that's going to say that employment is stable, right? It's important right now. So let's see how it goes. Again, we're waiting European central bank's key interest rate decision, and I do think they're going to lower rates. Does not put pressure on Fed. Fed is independent. Well, Krishna, it does and it doesn't. It kind of it. You're right and you're wrong. It doesn't put direct pressure on the U.S., but it puts indirect pressure on the U.S. Okay. Dollar Tree will impact stocks like Dollar General and Five Below, which we've been shorting. We're telling you guys to short almost every single session here. So it will have an impact on those cheaper stocks. It will. 229, really? Ooh, look at that. So see, okay, all right. That's important. See, the number is going higher. Yeah, that number is going higher. So there is something. Okay, so look, remember I told you that the job openings report, we could have less employment because the labor market's tight, right? So I said we're going to need to see the other side of the equation. Well, guess what? Today, we're now, if the number is 229, then we are seeing the other side of that equation. And that means that the labor market is softening. And if the labor market is softening, that means the Fed can change their timeline. Now, obviously needs confirmation tomorrow, but that's significant. That can actually fuel upside for the market for the bond market, because then it's telling us that the worst the data, the worst the employment data, the higher the odds that the kid is going to get that bike before December. You understand? So the worse the data, the more upside, the more deflationary pressure we will see. So again, if that number is 229, that means we are little by little creeping up. Okay, so important, very important. It's not huge. Tomorrow we'll have the big report, and then we have CPI and PPI. But employment data is one of the biggest reasons why the Fed has not lowered rates. So this can be and by the way, they could use, between you and me, they can use this as a political thing. Well, we weren't planning on lowering rates, but the job market is now being impacted, and we have to take action earlier. And again, Krishna, yes and no. There's no direct pressure, but there's always indirect pressure. If another major country lowers rates, there's always a question of, hey, if we're lowering rates, why aren't they lowering rates? Okay. All right. So just FYI. The S&P and the NASDAQ notched an all-time high, and the S&P notched an all-time high. Blue chips reluctantly edged a one-week high. So you could clearly see, even if I didn't go through all of that analysis with you, you could clearly see that blue chips are lagging because a one-week high is not the same thing as a all-time high, okay? CrowdStrike surged 12%. You're welcome. I know that folks in the pit made money on it yesterday. I know for a fact you guys made money on it yesterday. I'm not even going to ask you because you made out like bandits on that stock yesterday. ASML also announced shipped the latest chip maker to Taiwan Semiconductor. So chips are getting a little more upside. Remember I said there's probably going to be a little follow through. Bearish side, Dollar Tree slumped more than 4%. Top percentage discount retailer said it was exploring options for its struggling family dollar business. That's bad. That's very, very, very bad. ADP, this is the report that came out, and ADP is telling us that payroll rose by only 152,000, weaker in May. That's a job problem. That's what caused the rally yesterday. All right. ISM service index stronger than expected, highest level in 9 months. Service price fell. These were not that as important as jolts. But Friday, which let me just make sure this, 229. Yeah. So it is going, unemployment, jobless claims are going a little higher. Is this a lot? 8,000? No, but it's going to spook the market. Carla says, I spoke to Matt yesterday about settings for VWAP. He was very helpful. Just so you know, I spoke to multiple people in customer service. They are not up to date with the correct. That's because, Carla, that's because they don't have the correct information. That's because Matt and Brian are still weeding out the correct stuff, and they're not finalized yet. This is why I would appreciate it if you guys would stay away from customer service and the VWAP stuff till Brian and Matt are finished. Once they are finished, yes, it's exactly what Cam just said. Be patient. Carla, you may not even have the final product yet. And this is why I said, please hang out and wait for Brian and Matt to finish. If they're doing something, they're trying to make it more automated for you. They're trying to make it easier for you. The best thing you can do is get out of their way and let them do that. So Matt can spend an hour with Brian instead of helping you put something into your computer that may not be the final product. But thank you for saying that, Carla. But I'm just explaining to you, let them do their thing. Let them finish their thing. They're working on it. Let them finish on it. Don't judge a product that's not done yet. We weren't even supposed to give you that. That's just a bonus that I decided to put in. I could have charged $1,000 for this scanner. I'm not doing that. So just be patient. Be patient, please. It's still being modified. All right. So this is a report that's going to cause the bonds to potentially go higher, not lower. And this may give the techs a little bit more follow through. But be careful on blue chips. They're not buying this rally very much. And tech seems to be cooling off too. All right. Let's continue. The kid and his rates. We still have a 16% chance that they're going to lower rates in July. I think unless the job market gets completely screwed up over the next 2 to 3 weeks, the odds of this happening is absolutely zero. But I'm not going to, if the job market gets bad, we could see them starting to do something in September. I would say right now, based on everything we're seeing and not including tomorrow's report, I would say realistically, this is at 15%, 20 to 15%. I would say the odds of this are where this is right now. But again, we've always been 3 months later. Market looks to be coming down a little on job news. Yeah. I mean, look, we made an all-time high yesterday. You got to have a little bit of profit taking. A lot of folks are going to be taking profit on their tech positions today. All right, jobless claims already came out. Let's keep an eye on this number. I personally believe that this is going to start cooling off again because I think the CPI and PPI are going to reinforce that things are fine, and the Fed is going to come out and not change their trajectory and say we still have a lot of things to do, and then this is going to just fall on its face. So I do believe that's going to happen, and I'm not usually that specific with you, but I feel pretty confident about that. Labor cost, non-farm productivity data will also be watched today. This is important because this will reflect on the CPI and the PPI report. All right. That is a very, very important report that we need to pay very close attention to right now. Very, very close attention to right now. All right. By the way, we have 400 people in the room watching this broadcast right now. Just so you guys know, 400 people watching this broadcast as we speak right now. Love that. Love that. Love that. Love that. Now we have 403 people breaking our records every single day. Love it. Love it. Love it. Love it. All right, let's continue here. Let's continue. All right. Perfect. 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 All right. 403, baby. Now it's 399, but we had 403. U.S. trade balance data will be reported today as well. Now, all of these reports are coming out. This should have come out at 8:30 as well. Let's see. Unit labor cost, it's going down. That's good. Non-farm productivity, annual rate, the same, hasn't changed. That's not good. That's not good. Not good. Hey, Angie, how are you? Bob, how are you? Oh, 404. I didn't see 404. I saw 403. But so the report is nothing crazy, but this jobless claim is worrying me because this jobless claim is confirming what what Jolts said. So tomorrow is going to be a very, very important report. Very, very important report. And again, please keep your eye on the bond market. Krisha says, I want to salute all 403 people here. Here know a lot. I'm relatively new. Good, Krisha. You'll enjoy this session. It's a good session. We do it every morning. Europe. All right, let's talk a little bit about Europe. Europe is up 0.75 this morning ahead of a widely anticipated interest rate cut. I guess they're going first before us. Tech is leading the gains on Thursday while utilities underperformed. German statistics said Thursday that country's factory orders unexpectedly declined. Eurostats released Thursday indicated the Euro's area's monthly retail sales fell more than expected. Meanwhile, the focus now shifts to the interest rate decisions. Due later in the session, they're widely anticipated to reduce its deposit rate to 3.75 from 4, making it the first interest rate cut since COVID. It is going to put some indirect pressure on U.S. But here's what I'm going to tell you. Here's the good news. Interest rates going down in Europe is going to cause more deposits and more money flow into the U.S. And the U.S., if I know this, U.S. knows this too. And they're not stupid. So they may want to keep rates higher for longer just so we can get more European money into our account. Hey, 405 now, guys. We got 405. Has indeed just cut its interest rates by 1/4 of a point. Too much demand for must NVIDIA is too much. All right. So just FYI, I'm just giving you guys some feedback. This could actually be good for the US, okay? In this short term. China closed lower, not giving us any tailwind. Retail software stocks led the decline on Thursday. Not good. Property stocks also retreated with lingering regard to their effort to support the sector. If they can get their real estate thing together, they would be really well. Investor confidence remained weak even after the People Bank of China infused 2 billion yen into liquidity into the banking system. Interest rates were unchanged. Japan closed higher, tracking overnight gains in Wall Street, gains in tech stocks. They're just pretty much tracking us right now. Pre-market, 5 below. I've been giving you this stock as a short for I don't know how long. They had bad earnings, and also Dollar Tree's news is not helping this company because they're very much related. Okay, look at that. 407 in the room. Love it, love it, love it. Sectors. Let's talk about sectors, and then we'll get into the hot stocks, okay? So do we have momentum right now? Let's see. You'll see. Remember what I told you? Check out these numbers, not just for how many stocks are going up or down, but for if there's follow through. Anytime we have over 100, 120, we have follow through. We have now 182 stocks making 90-day highs. That means you could hold on to your positions just a little longer. That means there's follow through. When you have less than 100 stocks making 90-day highs, it's you got to grab it. You got to grab and run. You understand the difference? Grab and run. So to the short side, we're mostly swing trading right now. To the upside, we're because swing trades, you don't need that big move intraday. You can just wait 5, 6 days. But here we're momentum trading. You still have some upside. So that means if you're holding positions from yesterday, liquidating them this morning shouldn't be too bad because we have some follow through. We have now the couplings behind the train. We have a lot of couplings. So they don't just stop all at once. All right. And if this number gets to 250, 300, we will see more follow through, although I'm very doubtful because of the bond market. I think the bond market is going to crap out after tomorrow, unless this report confirms jolts and the jobless claims. And the Fed is doing please, 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 please. We want to lower rates. Please confirm. Please confirm. We want to lower. Please confirm, because they can't do it any other way. Look at that. 415. We're breaking records, folks. I love this. So we do have some follow through to the upside. You got to be cautious to the downside because there's just no momentum. What does that mean? That means if you're going to trade to the short side, you got to find stocks that have at least 1.5 relative volume. That means relative volume has to be 1.5 times bigger than the last few days. That means if average volume is 1 million, that means today volume has to be 1.5 million. Otherwise, you're not going to get any follow through. And you want stocks that are really breaking down. So don't flirt with the short side today unless you know what you're doing, okay? But long side is okay. And we've been in this position for the short side for quite some time now. So there's nothing new there, but we are starting to see some momentum to the upside. And typically momentum doesn't last one day. It typically follows through, especially when you're making all-time highs and you have stocks like Nvidia driving you, okay? What about sectors? Do we have a salad or do we have some stability? Let's take a look. I'm very curious. I haven't looked at this morning myself. All right, Bitcoin. I like Coinbase right now quite a bit, and it doesn't have a lot of correlation to the stock market. And I'm thinking if folks start taking money out of tech, there's a really good chance they're going to be putting it into Bitcoin instead of just taking it out of the market, okay? Tony the Tiger says, no trading today. I got excited yesterday and rotated through all my accounts. That's okay. That's all right. Pre-market. All right. So real estate. Why? Because there's a higher chance now that the kid is going to get his bike. And if the kid gets his bike and interest rates go lower, that's amazing for the real estate sector. And that's also amazing for the retail sector. So these are coming up because of interest rates. Lower interest rates are amazing for semiconductors, for retail, and for real estate. There's a reason these are up here. But what about healthcare? Healthcare doesn't really care about interest rates. Healthcare cares more about politics. Communication is very much tech-driven and interest rates-driven. Google, Meta. I'm still liking this sector quite a bit. Consumer staples is a defensive sector. Consumer staples starts going up when stocks are coming off. That shouldn't be up here. Healthcare and consumer staples shouldn't be up here. Home builders make sense because you got the real estate market, so that should be coming up. Consumer discretionary should be coming up if interest rates are going lower. That would be like up here. Remember, it was all the way down here. But overall, semiconductors, communication, consumer discretionary. But look at technology. Technology's down here and semiconductors are up here. That's clearly telling us that this rally is not being driven by the entire tech sector, that it's being driven more by semiconductors than anything else, okay? Blue chips, but now you got QQQ coming down. So this is a mixed bag. Let's go back a week ago. Let's go back 1 week ago. All tech, look, semiconductor, tech, speculative. Look how good this looked a week ago. It was almost perfect before this rally began. Okay? but not anymore. We're in a complete fruit salad. So what happens? We base out. We come into stasis, or we come into equalization, and then we break out again. So to show you how that looks on a stock here, just to show you why I look at that, you could see it right now. Watch. See right here? Choppiness, equilibrium, boom, breaks out, breaks the equilibrium. So whenever you see a market doing this right here, that means things are getting back into balance. When you see, remember, price do two things. They build value, they distribute value. Here we were building value, and here we're distributing value. So again, need you guys to understand that. That's very important. And whenever you see a trending market, you will see these sectors out of whack with each other. All right. We talked about the sectors. We talked about the fact that the markets right now are vulnerable, to say the least. Although the S&P is a little bit higher this morning, the bond market is see, this is good news. This is good news for the folks who want us to lower rates. This is good news. So the bond market is doing everything it can to go up on this data. We'll see what happens. We'll see. I don't think it's going to. I think it's going to be very, very difficult. All right. Let's talk about stocks, right? Shall we? 418 people here. Look at that. We're breaking records. We're breaking records. All right. To the downside, we got DAR. Let me just put this on daily. Downside, breakdown, restaurant. Halliburton. Be careful. Be careful with stocks today. Be careful with stocks. Be careful. CME Group, Chicago Mercantile Exchange. If we're going to have a slowdown in the economy, it's going to be a slowdown in the markets, which means slowdown in commodities. If interest rates are going down, the commodity exchange, right, is going to go down with it. Because remember, commodities go up when interest rates go up, and commodities go down when interest rates go down. Why do you think this has been going down the last few days? Chicago Mercantile Exchange. This is this trades commodities. Okay, trying to put things together for you. First time we've ever talked about this stock before. Yes, I'm being wildly sarcastic right now. These are all to the short side. Bank OZK. This does not look good. CSGS. Med. Oof, that's a stinker right there. Look, 200-day moving average, 100-day moving average, year-to-date VWAP, 50-day moving average, quarter-to-date VWAP, 8-day EMA, and we're below all of it. Yeah, that's weird, Tony. Weird. Why? This is ADR. We talked about this stock last couple of days. West Pharmaceuticals. I didn't find amazing stocks to the downside today. Found some good ones, but nothing really amazing. No problem, Krishna. Welcome. And I hope you join us for the VIP room today at 11 a.m., by the way. We do the afternoon session like this as well. And I answer a lot of questions and we talk. And I do that from the office. This one I do from the home. Then I go to the office and I stay there the entire day. But that's the link for the 11 o'clock session. Thursday, Friday, 11 a.m. So be careful here. Be careful here on Bruker. And last one, PRO. Again, I wasn't looking at shorts today with like a big yes. So be careful with the short side. There's just not a lot of follow through. Now let's talk about the long side. Cornings. Look at that 8-day EMA right there. ENPH. Remember, there's an inverse correlation between solar stocks and energy stocks, traditional energy stocks. Honeywell. We've never talked about this stock before. AZN. We've never talked about this stock before. You guys know I'm being really sarcastic. I would wait with this one. It's going too far above the 8-day. I would be taking profit on this one, like we did yesterday in the VIP in the one of our programs, I think. RTX. Love this stock. Love, 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 love this stock. Liking the stock for a long time now. How many times have we talked about this stock here? Maybe once, right, JT? We've never talked about this stock before. I like this stock. I do like this stock. Especially folks are going to be delaying their real estate purchases. There we go. This is an interesting one. I think this is a healthcare stock. This one is definitely starting to show up on my radar because real estate is, healthcare is starting to pop a little. Dozens of times. I need to drive into the office now. Can someone place the short and longs in the chat every day? I'm not sure if they could do that, but I'll try to do that. You can also watch the replay, Kenny. You could just always rewatch the last few minutes. Here's the link. Let me give you the link for this. So you can always rewind and watch. I like the trend here. I like the trend. I'll put it in the chat. I'll put it in the chat. Micron. I like Micron still, but be careful with chip stocks right now. Be careful. The two chip stocks that I like are Micron and Taiwan Semiconductor. Taiwan Semiconductor is a little overdone. I would hold off on Taiwan Semiconductor. It's a little overdone. Oh, lithium. Okay. Thank you for that, Duzzy. Thank you for that. For some reason, I thought it was a healthcare stock. Just shows you how well my fundamentals are, Duzzy. AI stock. Look how it crossed the year-to-date VWAP, and it's just sitting right here. It looks like it wants to go higher. Yeti. And that's it. That's crossing the 200-day moving average. Thank you, Carlos. I appreciate it. All right, folks, that is all I have for you. Now, remember, at noon today, I'm going to be sharing some goodies with you right after the VIP room. We're going to talk about the top seasonality stocks for June. And not only, but I'm also going to cover my wealth windows and the process that I use to find these wealth windows. I highly, highly, highly recommend that you guys watch that, okay? Highly, highly recommend you guys join me. It's going to be at noon. And before that, we got VIP room, and the VIP room is at 11 a.m. Don't forget, Cam has customer service live from 10 a.m. to 1 p.m. every single day. Be careful today, okay? First of all, no action before 10 a.m. No action before 10 a.m. And overall, be careful today because we have a big employment data today. So if you guys get stuck on the wrong side and you have to carry over a position, remember, you're going to carry over a position into the employment report, which is not something you want to do unless you're a gambler, okay? And you guys know what happens to gamblers. They don't make it that long. I love you all. Thank you so much. I appreciate your time, and I hope you guys have a fantastic day. Bye, everybody. Have a great day, everyone. Bye.